Good afternoon, everyone. In today's video, I'm going to be translating a 40-year-old concept. It's called the Wilder's momentum concept, and we're going to translate that into a ThinkOrSwim indicator. Now, before I dive too deep into the tutorial, I'd first like to give credit to the person who discovered it, which is one of our Volatility Box members, Dorothy. Dorothy spent a good amount of time reading about this concept, discovering it, translating it into an Excel sheet, which is what's the backbones of this tutorial, and a lot of her research is what makes this possible. So in case you'd like to learn more about it, the place where Dorothy learned about the momentum concept is this book right here. This was written in 1978. It's a book called The New Concepts in Technical Trading Systems. And on page 52 or 53 of the book, but 52 in the PDF right here, that's where you can learn more about the momentum concept, read a bit more about it, learn how to translate this entire concept into a full-fledged system with targets, stops, so on and so forth. In this video, I'll keep it fairly high level with discussing what is the high level concept of the momentum factor, but there's a lot more you can learn about it if you do find this to be interesting. All right, now back to the tutorial. Before we dive into the actual coding portion of it, let me cover what we're going to be discussing in this video. The first is a very high level overview of Wilder's momentum concept. We'll spend maybe 5 or so minutes on that. It should give you a good understanding of what are we trying to achieve, what does this momentum concept really mean, what's the purpose of it, how can you use it, and what does it look like on charts. Then next, we'll translate that into some ThinkScript code to build a ThinkOrSwim indicator, and then finally take that indicator and translate that into a scan to try and find places where we have increasing momentum based off of what Wilder describes to be the momentum factor. All right, so let's get started with first understanding what this concept really is. Now, starting off, Wilder's momentum concept is really, in a high-level view, a way to measure momentum using the acceleration and deceleration of price. Now, I know that sounds really easy or straightforward or commonsensical, but let me go through a real-life example here. So this is one from the book, but let's assume here that you have 10 days of price activity here. So that's what this represents, 10 days in the first column. The second column right here represents all of the closing prices for this particular ticker for 10 days. So you'll see we went from 49.25, 49.75. So it's just tracking the real close price. Now in this third column right here, we have the momentum factor, which is what we're going to be paying the most attention to. The momentum factor is the key of what we're going to be building here. Let me first cover how to translate this momentum factor right here. Momentum factor is where you compare today's price to 2 days ago's closing price to gauge what has happened since. So for example here on day 3, you'll notice the closing price is 50.25, which is $1 greater than the closing price from 2 days ago. So that's where our momentum factor right here is $1. Now we move on to the next day where the price is now 50.75. So if we now use 50.75 as our means, we're comparing it again to 2 days prior, which is 49.75. 50.75 minus 49.75, 1.0. So far, our momentum factor is plus 1, plus 1. Now let's come into day 5 right here. Day 5, we see the closing price of this particular ticker, 51.10. We're comparing this to 50.25, and between 51.10 and 50.25, that difference is plus 0.85, and so the momentum factor right here is actually decrease, right? We went from plus 1 to now plus 0.85. Now let's move into day 6. Day 6, our closing price is now 50.75. We compare this again to 2 days prior, which is also 50.75, and 50.75 minus 50.75 gives us a momentum factor of 0. Now we keep going forward here, but you should notice that this momentum factor fluctuates as time goes by, right? And so on the right-hand side here, I have price visualized, but if we take a look at this, so here we're still gathering data, we don't have 2 days. Now 50.25, this was the first day in which we were looking at the momentum factor. At this point, the momentum factor was plus 1. Then the next day, 50.75, also plus 1. Now the momentum factor the next day decreases to plus 0.85. And you notice what happens after that in terms of price activity. We start to see a bit of chopping around sideways, and then eventually that leads to some sort of a sell-off right here. That's the whole purpose of the momentum factor, is to try and get ahead of when you're going to see some of these momentum shifts and really try and ride this ebb and flow based off of whenever these shifts actually happen. So this should have been a good precursor. Let's keep diving further and define the momentum factor here in a simple way that makes it easy to write in ThinkScript, which is the momentum factor is the difference between the close price today and the close price 2 days ago. This is what the definition is in that book as well by Wilder. Again, feel free to read more about it, but on a high level, that's what is called this concept of momentum factor. So now the question starts to become, well, okay, now that we understand what the momentum factor is, or at least on a high level, how do we actually go about about using it. Now, the way Wilder suggests using it is to go long on the close today when the momentum factor today is higher than either of the previous 2 days. Now, I've made sure to underline the word either right here. This is key because for our short scenario, we'd like to see that in the short case, our momentum factor today needs to be lower than both of the previous days. So this should give you a key insight right here. So in one case for longs, we're looking for the momentum factor to be greater than either yesterday or the day prior, so that's the previous 2 days, versus in our short scenario, we want this momentum factor today to be less than what we've seen both yesterday and the day prior. So it's a little bit more stringent in the short scenario in terms of determining when that momentum actually starts to shift. So now if we go back to that same example that we were talking about earlier, this is the same data, the same ticker, same closing prices, and the same momentum factor. The first period in which we're going short is on day 5 when we see our momentum factor right here of 0.85 is now less than the previous 2 days. Both of them, not just either, but both of them, where 0.85 is less than 1 and 0.85 is less than 1 from day 3. And so that's where we get the momentum factor here suggesting that we should be going short since we have the momentum factor being less than the previous 2 days. Now in the scenario of a long, that's day 10 in which we see that we have a momentum factor of negative 0.25, which is greater than both negative 1.75 and negative 1.0, but it did not need to be greater than both of them. As long as it was greater than either day 9 or day 8, that momentum factor would trigger into a long entry. So hopefully you get an idea of how the momentum concept works. How does it change as price changes? When should you be looking at potential shorts? When should you be looking at potential longs? And it's this shift from long to short or short to long that I think starts to give us some sort of a heads up. All right, so now that we've covered what the concept is, let's go ahead and start by writing some simple ThinkScript code. Let's start by coming into a chart of the S&P 500, doesn't really matter what time frame yet, and click the studies icon. We'll start by creating the indicator first, and then we can take a look at how it looks like on our charts. Now here at the top, we can give this a name, so we can call this something like TI Wilder's Momentum Factor, or Concept actually, probably a better name. So we'll say Momentum Concept. And now let's start by first defining what the momentum factor is. Once we define the momentum factor, we'll verify what it looks like in terms of physical value, verify that it's doing the right thing, and then we can start to define things like the long and short entry. So we can say something like def momentum factor, and now in defining the momentum factor, we know that the momentum factor is nothing more than the closing price today being compared to the closing price 2 bars prior to today. So there we can say close minus close with the array of 2. So that's referencing not yesterday's bar, the bar prior. Now let's go ahead and plot this to see what this looks like. So I can say something like add chart bubble, yes, plot this on the close, momentum factor, and then we can make this something like color dot yellow. And now let's go ahead and click OK. Click OK, and we should see a good amount of bubbles on our chart since this plots every single time, but it will only plot the momentum factor here. So as an example, our momentum factor on this candle, 14.35. When you take the close, 243.15, and you subtract it from the close 2 bars prior, which was 228.8. So that gave us a momentum factor of 14.35. Then we see the momentum factor here is increased to 23.84, and then here it decreased again to 18.05. However, at this 23.84 mark, the 23.84 momentum factor is greater than 14.35, and it's also greater than negative 17.56, even though it needs to be greater than only one of these 2 bars. Same thing with this bar, 14.35. This is also greater than negative 17.56, so this condition would automatically trigger true for that long entry, and it's also greater than the negative 12.29 or the negative 11.2, excuse me, that we see on the previous bar. So just like that, we have the momentum factor defined. Now let's come in and actually start by defining the long and short entries here. So I can comment out our add chart bubble. And now let's come in and say something like plot long momentum factor entry. And then here we said our momentum factor is going to be a long entry if we see that the momentum factor today is greater than either the momentum factor from the previous bar, or momentum factor is greater than the momentum factor from the bar 2 bars ago, right? And so if we just say something like that, and we say then 1 else 0, let's see what this looks like so far. So if I click OK and plot, you'll notice nothing happens on the chart since this is on the upper time frame. If I move this to our lower pane, Click OK. You should notice that this goes 1 every time we have the momentum factor giving us a long entry, and it goes 0 whenever that condition isn't true. So if we come back into where we were looking now, you'll see the momentum factor here was 1. And so these are the two bars we were looking at where you'll see the value there is 1 since we did have a long entry valid on both of them. Now I can come back in here. Let's also define our short momentum entry first before we adjust the plots. So we'll say short momentum factor entry. If our momentum factor here is less than our momentum factor on the previous bar, and our momentum factor is less than our momentum factor on the bar prior to the previous bar, then 1, else 0. And then now we have both our long and short momentum factors. Now let's go ahead and define this in a way that makes sense. So one way that I think works well, which I think was Dorothy's suggestion, is to use points. That way we see a point, say a blue point in the case of a bullish direction, or a cyan point where we have the momentum factor that's increasing, and then we see that same dot on our charts whenever the momentum factor is decreasing. So now to do that, we need to say, instead of plotting this as 1 and 0, we can plot this as close and double nan. Now let me take a step back before I do that on the short to just talk about what the change is between these two. Now when we say if this condition is true, then close, that means close is where this particular value is going to be plotting, the closing price of the current candle bar. And then double dot nan means, hey, don't plot anything, don't do anything. This 1 and 0 is a bit more useful for things like Boolean arrows, but that still means that when you have a 0, it will show on your charts when it's not true or if you have defined that condition, whereas using something like close and double nan allows us to make that look a little bit nicer. That also allows us to then come in and do something like long momentum factor entry and then set a painting strategy here. So we can say something like painting strategy dot points. Probably did not spell this correctly. Perfect. And then we can repeat the same thing. Factor entry dot set painting strategy dot points. And if we click OK, now you'll notice that even in this lower pane right here, we have the line plotting as dots instead of a line, and we have that plotting at what would be the closing price. The easy way to tell that is if I just move this from our lower pane up to our upper pane, then you'll notice that those dots, those same points, are now plotting at the closing price of each candle. Anytime we have a long momentum factor entry, we see a cyan dot. Anytime we have a short momentum factor entry, we see a pink dot. So for example, right here, you'll notice we had blue momentum rising, rising, rising. Then you had momentum factor give you a heads up that the momentum starting to shift just a little bit. Saw a bit of a pullback here before again you started to see the momentum rally back up in the direction of the overall trend. Now this is a little hard to see, so let's adjust the weight of this. So we can say something like long momentum factor entry dot set line weight, and let's set it to a weight of 3. Repeat the same thing. I keep misspelling this. Copy, paste that. Oh, I've defined this as factory. Let me just take out that Y just so it's proper. Factor entry, perfect. Now, short momentum factor entry dot set line weight and set that equal to 3. And now, if we click apply, you'll notice the points are a bit bigger on our chart. Now, one other thing that stands out is there's a whole lot of points here, and I'd like to be able to easily turn that on and off. So we can come back into the studies menu here and add in a Boolean variable at the very top that the user can control, which allows you to do that. So we can say something like input show momentum factor, and we can set this to a default value of yes, and then take this Boolean variable here, and we can loop all of this inside of parentheses, and then add in something like and this condition needs to also be set to yes for us to be able to plot this. Now for the short entry, we can repeat the same process here. So we'll say and show momentum factor needs to be true. And then this way, anytime the user turns that off in the studies menu, all of these points disappear. So let's take a look and test that out. So if I double click, then turn this from yes to no, click OK, click apply, you'll notice all of a sudden the points disappear and we don't see that on our chart. And so just like that, we have this momentum factor, which is a concept from way back when, almost 40 plus years now, defined using some very simple ThinkScript, right? So this took us, what, only less than 15 lines, which technically 15 through 13 are scrap, but I'm going to leave that in here for those that would like to see the momentum factor. Let's actually add in another variable for that, so we can say something like show momentum factor bubbles. And then here we'll set this to a default of no. And then instead of yes, I can add that as the Boolean variable. And so that controls whether or not we see the bubbles. So one way to test this out, so if I click OK, and now if I say yes to show the bubbles, you'll see we see the momentum factor. If I turn this off, the momentum factor disappears. Now, one other thing we can add in here on this bubble, now that we have both our long momentum entry and our short momentum entry defined, is we can take the same code right here where we check the momentum factor criteria and use that to change the color of these labels as well. So we can say something like, if our momentum factor is greater than either of the two previous candle bars, then color.cyan, else color.pink. Click OK. And then let's come in, turn that back on, apply. And now instead of just a consistent yellow, you see the momentum factor with some easy visual cues that give you an idea of what sort of momentum do we currently see in the marketplace. Now, for those of you that are curious about this concept, you can take this one step further by defining the trend balance point system here. The trend balance point system is described on page 53. That's where Wilder gives you the formula to try and assess, hey, if you need to be able to take action today with the closing price, what does the closing price need to be today for our long momentum entry to trigger or for our short momentum entry to trigger? So for those of you that would like to write that into your code as well, that's another concept in which you can take this one step further. But for us, let's start to shift gears a little bit and create a scan using the few simple lines of code that we've just written to try and identify, hey, when do we see this shift? So essentially, when do we go from a pink arrow right here to something like a blue arrow, or a blue bubble, excuse me, meaning that the momentum factor here has shifted. So let's come back into our code. Let me copy all of this code, and we can come into our scan tab, and let's create a new scan right here, or we can remove this, add in a new filter by clicking Add Filter, then click Study. And once we click Study, in this dropdown, come all the way to the bottom and choose Custom, which allows us to create a custom study filter, and then switch over to the ThinkScript Editor tab, and here I can paste in that code. Now inside of our scan, we don't need the chart bubble. We also don't need either of these, and we can remove the subsequent Boolean checks inside of our code as well. Now, the one thing that would make our code a lot easier for scans is to remove this close and double nan and instead use very simple Boolean conditions as 1 and 0. So let me go back to that so I can say if that condition is true, then 1, else 0. And then same thing right down here below, which also means we don't need any of these painting strategies since we're no longer plotting this. We're just trying to find places in which this momentum factor is true. So now we've boiled this down to, I think, just 3 lines of very simple code. We have one error, which is exactly one plot as expected. So here I can just comment out line number 3, which is our short momentum factor entry. Click OK here. And now let's go ahead and run this scan inside of, let's just say, the S&P 100. Click Scan. And there, let's use Apple as an example. So we come into the chart of Apple. That's something that hit our scan. Let's see if we do, in fact, have a shift in momentum. So as of right now, we see that we just have the momentum being blue or positive, but we don't see a shift. So let's come back into the Scan tab here. And let's tweak this code just a little bit. So now we have our momentum factor right here. We have the momentum factor entry as well. Now all we need to do is change this to something like a def. And we can do the same thing for our second plot and create a new plot variable here called signal, in which we're checking, hey, was this condition true today and it wasn't true on the previous bar? If that's the case, then go ahead and trigger yes. And I'll repeat the same process here for our bearish side as well for those that are interested, and comment this out. So in case you ever did want to try this on the bearish side to know where momentum is changing, all you need to do is just delete this line of code and add in a hashtag right here to comment out the bullish line of code. So now coming back in here, we can say if we have a short momentum factor entry today and we did not have that short momentum factor entry on the previous day. Now let's click OK, rerun the scan. Currently we have 41. We should see a much smaller list, which we do. So now let's go into Pfizer. And there is where we see an example of this momentum factor shifting, right? So now let's zoom in here and take a look at what this looks like. So there, our momentum factor as of Friday's close is 0.26. That's again comparing this close to our close from 2 candles ago. So that would be this candle right here. Using that price, we see our current close was 37.13. So if I bring in a calculator right here, so we'll say 37 0.13, and we subtract that from the close of the candle 2 bars prior, in which we see that close was 36.87. So let's bring that back up, 36.87. Our momentum factor is 0.26, which is what we see inside of our bubble. Now to measure whether or not we have a long entry, is 0.26 greater than negative 0.13? Yes, it is, and this condition is automatically true. This number also happens to be greater than 0.06, and so that's a double whammy right there. Now let's take a look at this 0.06 to get an idea of what the bearish momentum factor looks like. So there we see our momentum factor here is 0.06, which again is based off of the close from 2 candles prior. Now we compare 0.06, is 0.06 less than 0.38? Yes, it is, but for our bearish side, it needs to be less than not only 0.38, but also the candle that it's comparing itself to as well, which is 0.07. And in both cases, these conditions are met, which is where we see that we now have a bearish momentum factor condition. And just like that, we created a scan in which we went down from the S&P 100 stocks to a list of 5 stocks here, in which we have the momentum factor shifting bullishly. Now let's repeat this for the bearish side as well to test that. So I can comment this out, and then we can uncomment out the second signal and click OK. Let's run this. Here we have more. Here we have a much larger list, so 56. Let's take an example of, say, Ford here as an example. Come into Ford, and there we see our momentum factor as of Friday is 0.16, which is again less than 0.41 and less than 0.32, which is where this is currently triggering. Now, if we turned off our chart bubbles and instead turn back on the momentum factor right here, then you'll notice that we have the actual momentum dot plotting right down here below. The one thing I do want to change here is this weight. I do think 3 is a little bit small, so let's just go up to the max, which is 5. Click OK. And hopefully that's a little easier to see. You can also plot this outside of the close if you'd like, but more times than not, this helps to keep your charts a little bit cleaner and systematic so that you just have an easy way of tracking price. And just like that, we've translated Wilder's momentum concept, or at least on a very high level, the momentum factor, into not only thinkorswim code through this indicator right here, but also a scan which allows you to keep track of how this momentum is shifting. Now you can of course keep diving deeper if you find this to be useful. There's a lot more that you can do with this, so if I expand this a little bit, you have the trend balance point system. He also goes through a procedure, and then you also have things like what would be your stop, what would be your target. So there's a lot deeper that you can dive into this. A lot of this is fairly straightforward and intuitive. I think for those of you that are curious to learn more about ThinkScript or practice your skills, this gives you a very easy way, along with the formula that you can use to try and actually create this. For both something like the stop, for example, he uses the average true range, which again, these are all values which thinkorswim makes available to you inside of the studies menu, where you have things like the true range already determined, which you can then use to try and build out some of these other pieces. Again, a huge thank you to Dorothy for doing all the research, the heavy lifting, sharing her sheet, and being very gracious with the knowledge that she's learned from reading about Wilder and sharing it with all of us here. This was hopefully a good example of how you can take concepts that you read from old textbooks, trading concepts that you may have heard of, and go ahead and actually create some sort of code here to try and translate that into the digital systems here where you can keep track of it on a better scale and use it inside of your own trading. All right, hope this video helps. The link to download the final version of the study code and the scan code is available in the description box below, so you can use that in case you face any difficulties along the way. All right, good luck everyone, happy trading, and we'll see you in the next tutorial.